Hey everybody, Kimo Sabi here, giving you an update finally after weeks of nothingness. We finally have a slight change in behavior locally. You will have a daily swing higher high than the previous high, equal closing highs than the previous all-time high, so that's still kind of bullish. You're still in this uptrend, and this is where you would want to see a higher low come in on that daily swing pattern. But what we wanted to see locally was a change in behavior here with a candle closing higher than previous. Because as we had the downtrend, lower low, lower high, lower low, lower high, lower low, lower high, until right here. Now we have a change in behavior. Now we have a potential long trade setup in the works here. So we had a 93,700. That was 50% of the weekly wick from that crash that happened 2 weeks ago. So 50% of that wick, we marked that off in the last video, and it was at 93.7. Finally tagged it, and now moving up. And now we're starting to get the likes of a potential uptrend starting here. So we are that much higher. So we measure from the low and see how much higher the next higher low could potentially come in. And I do that by just taking some kind of price measuring tool and see how much higher the current close is. Now we could have a daily candle, closing up at 100K, and that would extend this measurement. But for right now, this is what we're working with. And if we do get an opportunity, the higher low would come in at about 96,000, and that would take some of the liquidity, and you could come all the way back down to 95 at the bottom of those daily candle closes from before, which was previous supports. Not opposed to that. Where's price going? I do have this marked off at 100,000, 100,069, which is 50% of the weekly wick to the upside. So we had a doji candle on a weekly candle closing basis, and the 50% of the lower end of the wick was 93. The upper portion, the upper wick, 50% of that was 100,069, which could be the place that we're going to target next. And you have the downward sloping resistance line somewhere around there. So maybe we hit up there today and tag that and find resistance there and pull back down. And then maybe we can get a daily candle close up there, and that would lead to that much higher. And then we look for that much higher for our higher low, somewhere around 97,000. But we'll see where the opportunities are. You had a small opportunity, a quick opportunity here at the 50% of the weekly wick. 1 hour uptrend started, managed risk off of that 93,000 low. And moving forward, that's where I would manage risk off of. If you were to break that 93,000, you're likely targeting the next liquidity. And if you're breaking that, you're likely targeting all of the liquidity. And you're likely to hit 87.5, maybe as low as 85,000 before looking for an uptrend to start. And maybe you want to wait for that to wick down and close the daily candle back inside of the consolidation. That's up to you if you do get price action going down there. Now, you don't necessarily have an uptrend here locally on the daily until you make a higher low and a subsequent higher high. That higher high, our current higher high, could get all the way back up to all-time highs. That would be a little more difficult to deal with. You'd have to find supports and resistances in the range. I have this divided up, this whole range divided up in the halfway point, which is around 100K. So that's the strong section of the consolidation. We're still in the weaker section of the consolidation, the lower half, and I have those halves cut in half as well. So we're in the premium zone of the lower half. The discount would be at the 91,000 area. But since this is divided in half, the discount of this quarter of the range would be 95.5. That would be your discount. Break below that, that becomes premium, and then your discount is at 91. You might get a bounce there, but if you're pushing against the supports, you're likely to break them. And I would think that you're targeting 87, and you're just going to take all of the liquidity. But we have an uptrend in the making potentially here. So you have a higher high. This high could get a little bit higher and then pull back over the weekend and give you a buy setup sometime around Sunday or Monday, um, unless if we're going to short squeeze. A short squeeze, I think, would be initiated by a CME candle close tomorrow up at close to all-time highs. If you were to have that, it would kind of mimic what happened after the election, where you had a very strong move up and price consolidated on Saturday and broke out again on Sunday, Monday, and kept pushing for a very strong rally. And if this pattern is to be an ABC stopping there, then I would be expecting that strong rally to come right out of here. But no need to FOMO just yet. If price is just continuously breaking out, then you're going to have to look on lower time frames and trade the uptrend as it's going, like on a 4 hour or even a 1 hour chart, and manage risk off of those higher highs and higher lows that are happening on lower time frames. For right now, you have a higher high locally, look for the higher low. Price keeps going up, you still look for the higher low. It could be a breakout of that descending resistance. It could be the 50% of that wick on the weekly. You might find resistance, but if you break out, you might find a back test sometime over the weekend before resumption of an uptrend. Get into really low time frames here on the 1 hour, and we'll mark off our current range. Something like this, where we had a break of support, fake out, and then a breakout of support again. So that kind of looks like in Wyckoff theory, your volume is coming in at the extremes of the range, and your volume is just mimicking what it had at the top of the range. It really isn't breakout volume yet. You're not really getting rapid expansion to the upside, but you're probably not going to see that until you get above 100,000 and the market is chasing price up. But for right now, looks good. You took liquidity. You're likely to take the upper liquidity, pull back inside the range, and maybe hold the 50% or hold previous support as support again and push up out of there. If price is doing some kind of Wyckoff formation here, it would break up above this yellow box and hold above there. And you shouldn't see any 4 hour to daily candle closes below, probably not below 97,000 if price wants to show strength. Certainly not below that median line at 96.9. And then look for a breakout of that breakout, I guess. A breakout of the show of strength. If you have a show of strength up here and then you break out, that's indicative that price wants to push up. What I would actually anticipate is this pattern potentially squeezing up in the New York session to start out with, and then potentially sell down during New York, just because that's what price has been doing on Fridays. It's been selling off. Almost every Friday has been selling off for the past month, I think. Seems like the traders don't want to hold positions over the weekend, so even if price has been moving up, they seem to sell it off on Friday. But if you see a change in behavior in that and you actually see price pushing out and breaking out on a Friday, you may be getting that short squeeze over the weekend. And that short squeeze would lead into early next week, because essentially what you'd be having is price trading above all-time highs as the CME futures are opening, and those CME futures, they would have to be closing any short positions they have, and that would give you buying pressure to continue pushing price up, similar to what happened on this rally back in November. That's essentially what I think happened, was just the CME had to keep buying it to close their short positions from the summer range that lasted for months. So that's my thoughts there. For any long trades, definitely managing risk off the 93. I don't want to see it go below that if I want to be long. I do have some exposure from down there, and I'd be looking for opportunities to potentially add and just manage risk off of that 93. Break below that, and you're likely to take it out with lower liquidity. Till then, we'll see what the weekly CME chart closes like tomorrow, and I'll try to follow up and give an update. For seeing more opportunities. Have a good night. Keep them stops tight.